Welcome to the inaugural episode of Recruiting on the Rocks. I'm your host, Craig Stone, CEO of HireNetworks. We're an executive search and recruiting and staffing firm based here in the Triangle, but working nationwide. So why another podcast? There's obviously a lot of them out there. We're going to try to do something unique in the format and the content around workforce planning, employment brands, hiring, hopefully not firing, hopefully not laying off, but some good tidbits you can take with you. So in each episode, I'll sit down with a guest host, possibly a guest or two, discuss these topics and more while we sample various drinks of the guest host choice. Today, our guest host has chosen bourbon, which works well for me. My first guest is Tony Atti, CEO of Phononic. Phononic will be a great story for the Triangle. Really already is a great story for the Triangle. Welcome to the podcast, Tom.
Thank you, Craig. Delighted to be here.
Yeah. Tony, you want to spend a minute just talk a little bit about Phononic for the people that don't know, a little bit about yourself.
Of course. Tony Atti, CEO and founder at Phononic. We're innovating semiconductor solutions that sustainably transform cooling. When we founded the company, Craig, I had started my career in material science and then venture capital, investing in companies like Phononic. And the investment thesis was really exciting. Semiconductors have transformed the way we communicate, harness the sun, how automobiles see, now how machines think and learn, get in the world of cooling and heating, which impacts every part of our life. It's been destined to legacy mechanical systems that are inefficient, unsustainable. Why hasn't semiconductor innovation transformed that industry the way that it has so many others? I never imagined the journey it would take me on from universities in the Midwest and the West Coast to ultimately Centennial Campus, which was our first home. We now have more than 35,000 square foot fab out in Research Triangle Park. We've been domiciled here for more than a decade, 120 employees, manufacturing in the Triangle, product on the West Coast, sales teams in Asia, operations team in Thailand, and our technology is now disrupting data centers and AI, cold chain logistics and fulfillment, and even in HVAC. So we're proud to be in the Triangle. We're proud to grow here, and definitely sample some bourbon with you on this podcast.
Tony and I picked these bourbons today. We're going to go up in proof each time and have a little fun with it. So let's start with the important stuff, and that's why these bourbons. Why bourbon and why these bourbons? We're going to make it a little like the Hot Ones podcast. If you've seen that, so we're going to start at 90 proofs and go to 100 and go to 110 or close. So let's talk about why Clyde Mays. That's the first one.
So coming from a big Italian American family, food, wine, drink is part of our culture. So for us, it's as much about the story that comes with the food or the beverage as it is the quality of the beverage itself. So why I started with Clyde Mays is I had 3 children, and when my wife and I dropped our oldest off at Auburn University, that's a very difficult experience for parents. And I found myself in a bourbon bar in Auburn with about 3 dozen families that were experiencing the same kind of difficulty we were. And my wife is not a bourbon drinker. And I left to go get something from the car and came back, and the bartender had crafted an entire selection of bourbon drinks off of Clyde Mays. And there was all of these despondent parents wallowing their sorrow in Clyde Mays, and it's now become a fun part of our family. So it's an easy sipping whiskey, great for mixing, and it's a great way to kick off the podcast.
Let's try it.
Got it.
Cheers.
Cheers. War Eagle.
Well, Rich Lee will be happy with your War Eagle comment. I'll make sure he sees this.
It's a little homage to where it started. And the hint of cinnamon is a great finish.
That is easy to drink. Easy to drink it. All right, let's get into it. So I see a trend in PE firms, large growth capital firms, having their own operating partners.
Yes.
To really support different parts of the business. Obviously, HR, people, recruiting is a big one for me.
Sure.
Tell me what you're seeing or hearing from these PE firms with their investment in people. In other words, how important is the people piece? I mean, they all talk.
Yeah.
We all do.
Sure.
But how important is that piece to this PE firms?
Well, I think before I address the specific things of what I'm seeing, it's important to look at macro trends that I've experienced in my career. With venture capital backing from both the West Coast and all around the world that Phononic benefited from, the theme I saw early in my career was this sort of hero-founder complex where we lionize these founders, these entrepreneurs, these visionaries, these dreamers, and we rally the team around them and sort of follow them out to the battlefield. And depending upon the state of the capital markets, that can be a very successful model. where if you're seeing returns in the 3 to 5 to 7 year horizon based upon capital market conditions, you could rally around that flag. Over the last, I'd say 36 to 48 months, it's a very different capital market experience, very different exit scenarios for investors. So you're finding venture capital is becoming more private equity-like in their mentality. They have to carry their assets in their portfolio companies longer. They have to invest much more in the teams, both at the foundation, but also at the growth, because they're carrying these investments longer.
Right.
And that means you have to provide more than just board participation, but you have to look deep within the capabilities of the private equity fund and help those founding teams out. Because as I've experienced firsthand at Phononic, the dynamic and composition of the team changes dramatically, regardless of technology. From proof of concept to scale, scale to growth, growth to profitability, those require different dynamics of the team, and to expect just simple venture capital dollars in the founding team to figure it out is not representative of what's going on in the capital markets today. And as an example, private equity is adjusting and bringing those resources to the table.
Good. Has that happened in your firm? I mean, is that
Dramatically so. So my largest now majority investor is Goldman Sachs Asset Management, to a very unique Horizons fund. And when we first met the Goldman team, beyond just simply the brand capability, they had created, if not institutionalized, what they call a value accelerator network. And it is a collection of operating partners from successful Goldman portfolio investments in HR, supply chain, marketing. And candidly, as someone who doesn't lack the confidence in my abilities, when this first value accelerator team was offered to me, like many founders, I got a bit defensive. Just give me the capital and I'll figure it out on my own. It's not the right way to run a railroad. And I very quickly embraced these operators because they wanted nothing but the success of Phononic. So they now not only provided capabilities to me in terms of being a mentor or helping me with difficult decisions, they're now engaged with members of my team. Business segment decisions, supply chain management decisions, which in my world, in the semiconductor industry, is absolutely crucial. So the challenge is not just to identify if that capability is there, but as an entrepreneur, embrace it and not steer it. Over the last 18 months, it's had a dramatic impact on Phononic's success.
cut? All right, let's change gears a little bit, kind of go internal. Talk to me about what you value the most and the executives you've hired. And obviously, it's an ongoing problem.
Sure.
I should say problem, opportunity.
Yeah.
It's people, so it's a challenging thing. But isn't it their experience? Is it their upside? Is it, I know it's probably different depending on which role it kind of makes up of the current leadership team.
And the stage too, correct, to be honest.
Yeah.
So it's hard. As an emotional founder, I tend to look for the personal attributes of people that I want on our team. Their commitment. We have a set of values at Phononic. There's an expression we use, ride the lightning. Can you just figure it out with the team? And while those emotional, cultural metrics are critically important, we've learned the different experiences matter at the stage of the company. So early when we were in material science and R&D, obviously the competencies that we were looking at were very technical in nature. Engineering, material science, very sharp technical acumen. As we moved into the product stage of the company, those attributes changed to more product market-oriented dynamics. And then ultimately, once you start selling something, which we found at Phononic is the most dramatic change in how you evaluate talent, then the business and financial metrics start to come in. Right. So it's really hard to find a collection of one thing that you look for. Of course, you want there to be a cultural match and someone that understands that entrepreneurial world. But really, if you just get fixated on one or two things, you miss skills that people can bring to the table. There's a great story I always tell about an employee who's still with us at Phononic today, is when he first interviewed, and I went to the team and asked for feedback, everyone came back to me and said, Tony, I'm not sure if this person can ride the lightning. Like, I had so institutionalized that in the culture at Phononic that the only downside for this particular employee is he was just quiet. He was introverted. He was thoughtful. He thought before he spoke. And when I sat down with him, I immediately recognized the competency that this person had in the material science and semiconductor domain that we were in was incredible. But the fact that we were wondering if he could ride the lightning just because he wasn't as outgoing and dynamic as the rest of the team was a big save. So you have to be
balanced.
Oh, it was incredible balance. And he's an incredible value contributor to this day. So you have to be careful to balance what I'll say are the qualitative aspects of emotion with the quantitative aspects of competency and find the right balance.
So it's more than works hard and team player.
Oh yeah, those are sort of must-have work hard team, but it's the soft skills, how they engage with the rest of the team, but also, as you mentioned, their experience really matters. Like, we're now moving into the stage where we're running a P&L, we're growing internationally, and those are experiences that you can't sort of build on the fly.
Yeah. We have a new client who just came to us, companies 5 people strong, so it's early.
Awesome.
And the CEO, she told me, everybody's got to be technical. Everybody's got to be, and it goes to your point, at that stage, everybody's got to be technical. But at 100 people, obviously not the case.
Well, it's not just the number of people, it's the stage of the company. And a challenge we've had is when you start with that very technical workforce, just like we did, you start to believe that they're all powerful. Man, they tackled some of the most demanding material science semiconductor process challenges in the world and generated a several hundred patent portfolio at Phononic. Does that mean they know how to run a P&L? Does that mean they know how to run a financial statement? Does that mean they know how to take a product to market? You still believe in that initial team, as I'm sure that founder does, that you have to really check yourself, that go to outside people for help, and say, well, hey, they were wonderful at this particular stage, but now we're moving into different requirements for the company. Is that team going to scale in that direction? And that can be a really hard and difficult debate for a founding team, especially with the camaraderie you build.
All right, so I mentioned we were going to attempt to do a bit of a unique format.
Mm-hmm.
So we're going to bring in now a surprise guest who you don't know is coming.
Okay.
And they don't know you're going to be here.
Okay.
So we're going to try, I told you we're going to keep it light, fun.
Of course.
And, so a little bit of risk there, but but
No, you're going to be here.
he didn't know you were going to be too.
Good. I'm glad we got the quarters in. Good.
Welcome to Recruiting on the Rocks, Tim.
It's great to be here. Thanks for having me.
Tim's the managing partner of Co-Founders Capital, local VC funds. You guys work all over the country or just off the East Coast? Or
Mostly the Southeast is what we say. So most of our investments are here in the Triangle, but across the state of North Carolina. And then we do have deals. We have one deal as far north as Baltimore. And then we have several investments we made in Florida. But really our network and where we're seeing most of our deals is in the Southeast.
Okay, good. So mention the unique format again. So Tim did not know that Tony was going to be here, and Tony did not know that Tim was going to be here, which made for a little fun.
Yeah, and then I tried to escape, and you kept me here. So.
Yes. So he's stuck. We are going to try a little bit of bourbon, and Tony and I had already tried Clyde Mace, and there's a whole story behind it. There's no story behind this one, but this is the High West bourbon that's finished in the Prisoner. If you drink the Prisoner
wine,
which we all do.
That's my favorite one.
This is finished in Prisoner barrels, and it's one of my favorites. So I kind of picked this one. So why don't we taste this real quick?
I'll give it a shot. I'm a little surprised you guys there's any left for me. I get where you started. So cheers.
Cheers. This one. You can smell the
This one.
All right.
So I'm going to kind of start talking to both of you. I'll kind of go your way since you've just come in. So if I'm an executive in the area, which there's a ton of people moving here, a ton of execs here that have been working for companies other places, what do you think is the biggest challenge in the Triangle in regards to hiring executives or getting hired as an executive?
Well, I'm going to look at this and answer it through the stage of like an early stage fund manager and early stage companies. I think a lot of the folks, when they come to the region, they get introduced to the local VCs because we have portfolios of companies and we have LPs, and so we know places that we can plug them in. But for the executives, it's really hard for them to hone in on a stage of company that they want to be working in because it's very different skill sets across. I mean, you could be managing a big team, and you could say we were doing entrepreneurship and building teams internally. But it's much different than working with a team of 5 people that doesn't have any funding or money and is looking to, build and grow. It could be a completely different skill set depending on where they've been an executive before. So ask a series of questions. So I'm going to say, is there an industry you want to work in? Is there a stage of company that you want to work in? And try and really hone in on what kind of management leadership position that you really want. So I'd say stage is the hardest part when we're trying to place somebody. People think they can go earlier. but a lot of times it requires a completely different skill set to work in an early stage company.
They can't, or they don't know if they can.
They can't, they don't know if they can, they think they can, and then they realize that it's not, they're sure you need strategy and vision and leadership, but you also got to be able to go out and sell and go out and raise money, and you got to do the finances and do the books. And there's just not many people doing that stuff for you.
Yeah.
So it can be a hard transition.
Tony was talking about that earlier. It's, the executive he's hiring when he was 10 people at that early stage was a lot different than the people he's hiring now at this stage.
Tim knows this expression in our industry. Depending on where you're on the company, you're either raising money or you're getting ready to raise money. And that's an absolute grind on the team, on the investors, on the board. And it's a difficult mindset if you haven't experienced it before to just step in and embrace.
Yeah, fair enough. Okay, so, and I don't want to focus on the negative, but obviously we want to some lessons learned here in this group of being around for a couple of years. What do you see the biggest mistakes are from executives in hiring when they're in growth mode? So they're raising or about to raise, trying to get a product out the door. They're trying to get clients, get customers. And sometimes hiring as much as they want to spend time on it, their hair on fire. So what are you seeing as kind of the biggest mistake? What are the biggest mistakes they can avoid?
Yeah, for our companies, I would say you got to hire folks that are going to be doers, right? And you're going to be able to hire folks that are not only going to be able to get in, roll up their sleeves. If you're hiring somebody from his first sales position, sales executive, that person's going to need to be able to jump on phone calls, sell, close deals, carry a bag, hit a quota. I feel like if you go too high level, people that have only been managing for too long, you're going to hire somebody that's very expensive and not moving the needle quick enough for the kind of pace that we want to have in the organizations. So I say that could be tough.
So not making sure you hire somebody that can match the intensity of the team.
Right.
For lack of a better term.
And that has the right incentives aligned with the company. I mean, the company is about growing enterprise value in the business, being able to raise and hit your next milestone so you can raise more capital. You're not hiring somebody because they're going to get a nice salary and nice benefits and this is what they want and they're just positioned. They got to be all in on what the goals of the company are in that kind of growth mode. And a lot of times you don't have the time as a CEO or an executive that's hiring those positions to really vet that out. And so that can be a big challenge.
Yeah. Tommy.
Paraphrase what Tim's saying, one term I typically use through interviews with that circumstance is, hey, Phononic is a working dude ranch. Like you're rolling in here, and to Tim's point, if you're used to having people do administrative tasks for you or manage certain tasks that you would typically have had done someplace else, this isn't the right place for you. And the constant dilemma that we have is, do you go for that experienced person who on paper looks like a rock star but hasn't done tactical day-to-day things in a decade, or do you go for that person who's aspiring to be the rock star but you're not quite sure if they have the proven channel, proven capabilities to do it? I think our dilemma at Phononic is a little different, and I'll be very careful when I use this word because it'll come across differently. The biggest challenge I faced is loyalty. You've had that 5-person team that became the 10-person team. We talked earlier, was highly technical, highly specialized. That team proves to you that they can do impossible things. And then you believe that impossibility can transition from technical to business, to product, to market, to financial. And that's very, very difficult. And you're put in the awkward position as a founder of having to have some hard conversations with that team to say, and if not for you, we would have never broken through that technical metric that realized something the world thought was impossible. But you're not going to run this engineering team, or you're not going to run this product team, or I'm going to bring in this person from outside. You're not reporting to that person. It's a really hard conversation and a really hard barrier to break through. And sometimes those people get it and they flourish. Sometimes they don't, or they lead. And that's a really hard thing that I've struggled with.
Okay. So what about, it makes me think also, not just growth mode, but in acquisitions. This is going a little bit off what we talked about, but in an acquisition, you have different challenges of that integration. How do you make that work? I mean, I don't know what the latest data is on acquisitions, but I know the majority are not successful, and I know this is a big reason is the integration of the people.
Well, I think Tim's probably got more direct experience with that, and I have some comments, but I'll let him grab that one.
A lot of groundwork has to be laid before the acquisition is made. Like when you're running a process, when a company's running a process and getting bids that are coming in and trying to figure out, I'm going to sell to the highest price. Like I understand that, and that's the best returns to those shareholders. But talking about the strategy and the vision and how the teams are going to interact and what roles people are going to have and want in a new organization, those conversations really don't get very deep before these acquisitions are made. And the deeper that can be in laying out what everybody's role is going to be in new entity, new co, it's really important, but it very rarely happens, which I think probably attributes to why a lot of them don't work out.
Yeah. Yeah, we have the challenge oftentimes where when they look at the other team and they look at their team, and there's always going to be gaps. Sometimes it actually works out great, right? Because we have a couple of choices here we can use as our CFO or director of engineering or whatever it is. But oftentimes, even an acquisition, the gaps are already there, can still be there. So we will get a search, for example, for a CTO because there was kind of a leader here and there's kind of a leader here, but it's not somebody that can lead that big of a team together. So we see sometimes it's not just, hey, is it the right team to acquire? It's okay, where are the gaps and how do we fill?
Yeah, so I see it on the other end is I've had recruiters or board members say to me as we've looked at prospects for the company, hey, this person's been through a successful exit before. And that can be a very intoxicating reason to hire somebody. But at the same time, I've learned if you try and run your company with a prescribed outcome in mind, it never works. So when you're interviewing someone, yes, an exit in return for shareholders and all of us is the desired outcome. But if you're hiring someone because you believe that will drive a particular exit scenario, it almost never, if anything, you jinx yourself against that exit scenario. So I just recently had a board member say to me, Tony, what do you want Phononic to be? I'm like, same thing when I started, a globally disruptive, massive company. And that was the answer I gave. And he said, well, I'm like, if I just focus on that, the exit, the M&A, the IPO, whatever those scenarios, private equity purchase will reveal themselves. And I've tried to use that when I review talent, when I review investors, and I tend to be pretty consistent with it.
Do you use the term ride the lightning with your investors, your board, and the people you're trying to hire?
So I've had to back that off a little bit. As you move through the progression of investors, like as I joked earlier, we're Italian American, we wear our heart on our sleeve, which is very endearing and appealing. But as you move through the maturation stage of a company, rolling into a board meeting and hugging and grabbing everybody's not quite the direction or the professionalism or maturity, candidly, that you need to demonstrate. So we still ride the lightning, but we just do a little differently, a little more structured than I might have in the beginning.
I think that one thought I had is entrepreneurs very rarely talk to their board members about what they want from an exit or an acquisition in terms for the people and for the vision and for a lot of the teams and especially the CEOs are going to have to stay on with whoever's acquiring them. And normally when you're getting LOIs and you're getting stuff in and you're reviewing who you're going to go with, it's numbers driven. It's financially motivated for the shareholders. And there's very little discussion around what's the vision, what's the culture, what's going to happen to the people. And you want a board member, if you're an entrepreneur raising capital, you want a board member that listens to that and kind of has that in mind and has those discussions back and forth with the team.
Yeah, I think because entrepreneurs think defensively. If I go to my board with structured packages for my team, is the board gonna look at that as I'm looking for the exits? Where Tim's right, you have to flip that and say, to position ourselves cleanly, these are the things you want to have in place now. So if an M&A or an acquirer comes in, we look professional, we look organized. Because in my experiences, you will discourage a buyer if they come in and HR, the team, the executive structure is muddled. It's like, well, I'm going to have to then when people start sniffing that money's on the table, then asks become unrealistic, documents become difficult to structure. You want to get ahead of that.
Right. Okay. Let's pause here for a second and taste our high west.
Finish my high west.
Was this all right?
Did you already finish?
No, finish. Cheers.
Yeah, I like that finish.
It's good.
Yeah.
Oh, here he is. All right. Yeah.
What are you guys doing here?
Oh, man. Oh, no. What's up?
I thought it was going to be a collection of the best investors.
What's up, man?
Noise going
Tony Atti here. Take my seat.
See, buddy, how are you?
Oh, a little surprise being here.
Oh, my God.
Here, sir. Welcome to Recruiting on the Rocks, Jason.
Hey, thanks, Greg.
Jason Kaplane is the managing partner and colleague of David Jones of Bull City Venture Partners.
Correct.
You want to talk a little bit about BCKP? Say what you guys do?
Yeah, sure.
A few seconds?
Yeah, so Bull City is a venture capital firm. We're based in Durham, and for the last 25 years, we've been investing in seed and early stage software companies, mostly along the East Coast.
Okay. All right. It's nice to have a group of well-respected people in the community here. I have no idea why.
or respected by whom.
Yeah, I don't know.
Great to be together so early in the morning. Let's go.
I look forward to all 5 or 6 people that are going to watch this, seeing you guys together.
It's good for you to be with me. I'm sure you do that.
Yeah. All right, let's get back into it. So I'm going to read this part so I don't mess it up. I saw a stat recently that the hiring of software developers is down 70% from its peak, which I assume was probably 2022. In the past, that's the one skill set that, seemed to be Teflon. It seemed to not be affected by downsizing so much. So we can't have a podcast without mentioning AI. So is that because of AI? Is there another reason? Does it come back? What do you think about that? Jason, I'll start with you since you're last.
Yeah. Thanks. So I think like right now, a lot of, you used to be like a couple of years ago, it's growth at all costs, and capital is very, very accessible. That has tightened up significantly. So what you're seeing is it's not growth at all costs anymore. There's a lot more conversation in the boardroom about kind of like the magic box, dollar in equals $3 out, like making sure there's a return and ROI for all the spend. So the capital out there is also a lot harder to get. So with that comes a lot more tightened budgets, and that's across the board, not only engineering, but in other areas as well.
Okay. All right.
I will go two points on that. The first is when you're raising these larger rounds, so let's say it's a $10-20 million round for a company, everyone has on their slide deck the use of funds, and you got to chop it up between sales and go to market, and we're going to hire software developers, and we're going to do this. And so, as Jason was saying, when that pie shrinks, now it's a $5 million round, and people are a little bit more conservative, and whenever they growth at all costs, they've changed their mindset. It's just fewer hires in each one of those buckets, maybe more towards sales and less towards software development. The other thing I would say is getting to market with a technology is easier now than it's ever been. It's less expensive to get to market. You can get an MVP that's out there, that a proof of concept or an MVP out there, get people to start paying for it. And so it's not, I need to raise $500,000 to build a product to test it in the market right off the bat. You can do something a lot quicker and a lot less expensive. And so I think that in the earliest stages, I think, there are less people being hired on true founding teams on the technical side.
I think in this market too, for the larger companies, they were hiring for the future. They were hiring out here because talent was hard to get. And I don't think that's happening now. I think those kind of future hires are happening in the future versus now for the future, if that makes sense.
Yeah, I think for the bigger companies, probably. I would say that still for our companies, we're still looking for great technical talent all the time. Yeah, I mean, we just had an acquisition, so a couple of those developers were on the market, and I mean, our other portfolio companies were all over them as soon as they hit the market. So there are still people being hired and looking for great talent.
Okay, let's go back to the important stuff. Let's talk about our final bourbon of the day. So this is one that Tony and I selected together because we're both big Michter's fans. So this is the barrel strength. So why don't we taste it?
All right. All right.
Along with your
Let's
coffee.
Yeah, coffee over here.
Let's do it. Yeah, coffee now. Cheers, guys.
Right.
Cheers. Cheers.
Here, give me the
Cheers. I'll just
Yep.
give you this.
Yeah.
There you go. All right.
Proof? Yeah. You feel that rye kick in?
Yum. Yummy.
Warm you up.
Yeah.
Toss it.
You got it, buddy.
Good. I guess just chunk on. I don't know. Belgian, I like them.
Yeah, I know.
Okay, so we've kind of established that the safest job on the planet is not software developers anymore. So what is the safest job? Is it a good salesperson? What's the job? What's the job everybody wants now that feels the most safe?
I don't know if I'd ever use the word safe in terms of how we staff it at Phononic. It's the most opportunistic. And I'd say that the same advice I would give my college daughter is the same advice I would give to someone who's in the workplace early in their career or developed. Agility, flexibility, and cross-functionality. So we value at Phononic people who have a really strong technical background, but with some kind of product or financial background, if you can marry that together. If I look at the sales executives who are the most effective at Phononic, they have business or financial acumen, whether it was degreed or not, based off of some kind of technical background. So I'm really careful when macro trends come through, like AI or nanotech earlier in my career, to make sweeping statements about who's safe, who's not safe. the theme that I've seen is people that are the most successful and effective and the ones that I want to hire have a really nice combination of offsetting skill sets. So we have a supply chain capability with a really good technical background. You can decipher what's going on in Asia right now, which is really hard to do. So I'm safe, maybe opportunistic or growth oriented is how I sort of position people. And the ones that continue to be the most effective at Phononic are those that have a really bulletproof background where they combine some kind of unique skill set with a hard to find skill set as well. So some kind of technical business, technical ops, engineering, business related offsetting skill sets tend to be the most powerful people as the dynamic of the market changes repeatedly.
Yeah, that's a good point. And you made the point earlier is people are still looking for good
absolutely.
talent. And we certainly are finding it for them still.
I'll flip it just a little bit and say, we always tell our portfolio companies that if you can find a great salesperson that's going to pay for themselves, hire them. I mean, you can always find room in the budget to hire a great sales talent that's going to pay for them and for other parts of the organization. The challenge that we've had is for the companies that have longer sales cycles. I mean, I can only imagine how long your sales cycles are. What is a great salesperson, and how do you know if it's a 36-month sales cycle or it's an 18-month sales cycle? How do you know in month 11 or 13 or 15 whether they're going to be really effective? And that's challenging. So if you're a great salesperson in an organization that has a shorter sales cycle and you can prove ROI quickly, that's going to be the safest job because you're paying for yourself and you're paying for other people in the organization.
And your reference to AI, whether this is just software services or not, is a great way, to Tim's point, you can avoid cheating. So, Salesforce is a tool that, customer resource tool that every company uses. And while you can slice and dice the data a million different ways, we've used some different analytics to say, wait a minute, this customer's been in the funnel forever. Why aren't we closing that customer? Is there something wrong with us? Is there something wrong with them? Is the sales team not being honest about where they are? They're just so blind because they want this account to close. You can bring more finality to the decision making in that step and just make the sales team more effective.
Yeah, we'll kind of go back to my term or phrase that I often use, that we've never gotten a resume from a salesperson that wasn't 110% of quota.
That's right.
Slice and dice in one way or the other, right? That is me, so I can kind of say that and get away with it. But all right, so if you're looking at in the executives you're investing in, founders, of course, and even for board members that you're hiring at different stages of the company, what are you looking for? What's the trait that's, and I know that's a lot in one to say, hey, here's one trait, and maybe that's not the answer, but what does that person look like?
Usually for board members or just in general?
Both. So executives you invest in.
I'll take the board members piece is like, usually for like an independent board member, we're looking for something that like, what gap that we're looking to fill with the business. We're looking weaker even on the board. So maybe like we're weaker with marketing. So we might already hire a marketing exec, but someone that brings some kind of ability that we, some kind of like strength that we don't have. So we'll often help make those introductions as well.
So does it, when you have, so let's say you're going to hire a marketing person on your board, if you have a VP of marketing that is new to the role, and they're not a Noreen Allen that's they're done that 6 times.
Sure.
Does that influence the type of board member you hire?
Maybe some coaching. There as well. Also, another thing too is the cultural fit with the board is really important. So seeing some real mismatches. I think early in my career we try to like jam some people in there, but not really think about the cultural fit. And I think as I've gone through, like making sure that cultural fit is there is really important. So seeing some board members we brought in and things just kind of like blow up internally and kind of like a little bit of a wrecking ball. I think like finding that good cultural match is super important. And then you can usually test that out too early on with like make them an advisor, get them exposure, so test them out a little bit and allow them to test out their relationship with the company as well.
Yeah, I think that's a good point too, because I see oftentimes, obviously you have the investors that bring part of the board, you have a founding team that's part of the board, but those other people are sometimes, hey, it was my biggest individual investor,
Sure.
or hey, this person's got a big name, or they're in my space, and they're not doing that type of diligence to figure out that fit.
On the board and the right cultural fit, you have those nights before like a big board meeting the next day, and you know whether you're looking forward to that meeting or like you can't sleep because you just really don't want to go into that room. And in my experience, it hasn't been because the company's doing really well or not doing really well. and when there's difficult conversations to have, it's because of the people and the dynamics that are involved, right?
Yeah.
How do people react when things aren't going well? Do they remain professional? Do they remain level-headed? And so how do they interact with one another is really big. So that's what I've seen on the board level. For the folks that we invest in, the founders, the CEOs of these companies, we look for their ability to communicate and articulate their value props, the problem they're trying to solve. And founders and the CEOs need to be able to fund, lead, and sell. And that is, you got to be able to convince investors why they should be putting money in this down the line. You got to be able to sell product. You got to be able to sell the vision. You got to be able to sell the talent that you're trying to recruit to the team. You got to be able to lead an organization. So the only way you can fund, lead, and sell is if you have the ability to articulate, the problem you're trying to solve.
Yeah. Okay. Got one more question for you.
Yeah, great.
So,
Not for me.
yeah, I won't even look at you. All right, so it's 2025. We're already halfway through February. Give me some predictions for the market. Are we coming back? Will tech ever be the same? Tech in its broadest sense. For you guys, you two specifically, is SaaS dying? Think about that. Will manufacturing come back to the U.S. truly? I know as you look at tariffs and kind of the initial reaction tariffs, if you dig deeper, part of the point of those is not just the negotiation bargee chip, but bringing manufacturing back to the U.S. and it sometimes helps somebody put a facility over here, and that's happened in the past. Y'all give me your thoughts on the market for this year.
Well, I'll start because being in this position literally a year ago at this time, being asked that kind of a question, we picked as wrong as you can possibly pick. We thought the capital markets were done. Interest rates were sky high. There was no deals getting done. We thought we were well positioned with our solutions for AI, but we weren't quite sure. We had a cost structure in Durham that we thought was uncompetitive. And in March and April of last year, we made a difficult decision to dramatically downsize the Durham manufacturing footprint because the demand wasn't quite there yet, no matter what we anticipated coming. And the presidential election was an unknown that no one knew how to deal with, and there was political tensions with China, which is a huge customer base for us. And then a month later, we landed a premier customer in the AI space, and less than a month later, I had to rehire all those people I let go in Durham. Durham is now running 24/7. Our fabs in Thailand are running 24/7. I can't make stuff fast enough. So I'm very careful now about how I judge what's dead, what's alive. What I'm trying to be very tactical. I mentioned earlier the qualitative versus the quantitative, the emotional versus the data-driven. We believe we're well positioned with the right product market fit, which is really hard. So as investors, backing entrepreneurs, the best way to sift through the noise is, does your technology, whether it's hardware, software, enterprise, does it have the right product market fit? If it does, and you believe in it, pursue and execute in that vertical and ignore the macro metrics. We chose Thailand as a nice insulation against some of the macro geopolitical risk. It's been a great move for us. But what we found with tariffs is that it's less about incenting behavior. It's more customer driven. We have APAC customers that want to place their PO to our Thailand entity. We have hyperscalers in North America that want to place POs to Phononic. The best way is to not worry if tariffs really won't hit. Make yourself easy to do business with. So I'm really hesitant to make these declarative statements of what's dead, what's alive. Just run the right product market fit for your business and it'll take care of itself.
I like that.
One prediction that I have is, is SaaS dead and AI. What I think we are seeing is a lot, and I talked about this a little before, a lot of companies getting into market a lot quicker and getting earlier revenue and starting to kind of scale and then maybe flatten out a little bit. And so what I'm saying is, you talked about product market fit. Maybe the product market fit, how we think about it as seed stage investors, is moving a little bit later, right? Because you're seeing some technologies just get to market and get to revenue way quicker, and it's harder to sift through the noise. We'll get pitches all the time that we've been around for 6 months and we're doing 500,000 in revenue, and it's like, whoa, like 2 years ago that would have been insane, right? But now a year from now you're doing 600,000 in revenue. That's not the kind of growth trajectory you want. And so maybe the goalposts would just move a little further out to see whether these companies have product market fit.
I'll try to answer your question a little bit better than Tim.
Good luck.
I'm not sure if that was a prediction, but back to predictions. Here's like, I think every year, like last few years, we hear like the bankers say next year the market's going to return, and we're going to have IPOs next year, and the exit market is happening. It's very like jammed up right now. So private capital is not as accessible as it was, which we talked about, and then and because of that, and because we haven't had any exits, like the LPs are not writing checks into funds. Right. So without we need to have like IPOs and big exits. Which we at the end of last year, everyone's like, next year is going to be the year. Trump's going to be, elected. You're going to see money move a lot more. We're going to see more IPOs, more big exits. None of that has happened. And the bankers that we talk to don't see that in the pipeline. They would see IPOs. We would have an idea now about IPOs like this summer. And so we're not seeing that happen to the extent that we thought it would. So I think it's going to be another year of like the market's a little pretty frozen. And not as we sit here in February, I'm not optimistic for the rest of the year.
It goes back to our comments before the guys showed up earlier. Is the response to that is funds, whether it's early stage or the private equity ones that you referred to, are getting more actively involved. Don't run out of money. Run a tighter ship. Yeah. Run a better budget. And you're seeing that behavior still dominate.
And by the way, this is not unusual. So people are like, oh my gosh, this is crazy. But like the venture market is very cyclical. So this is just another moment that we've gone through. We've seen this movie before.
If I had to actually predict something, like which was the question? It's going to be a lot harder to raise first and second time funds because you haven't gotten liquidity, and other LPs that might invest in a new fund for the first time haven't gotten liquidity back. And so I think you're going to see less first and second time funds, which are typically the smaller funds. And so then the question becomes, for the more established funds, are they raising larger funds? Are they moving up market? Is there going to be, the stock of capital at the seed stage? How's the market going to react to that? We're thinking about how we still play in that same seed stage that we've been playing in, and not move up market, which you see a lot of established funds do over time.
Yeah, when it all works together, I think too, where we're due for another IPO or something substantial in the triangle where you have entrepreneurs come out of those companies because they've had an exit. You have money come out and goes into your funds, and it just all kind of works together. Right? We need one of those. We're due. So, thank you for you guys joining the first podcast.
Oh,
wow!
That's it.
Tell me about the bourbons. What do you think?
Last sip of my Victors.
All right.
What do you think?
Cheers. There you go. That's all. Okay.
You like chug yours and stuff. Good?
I enjoyed it.
Yeah, it'd be 3 good selections.
With the storm coming in the cold, warm me up.
Yeah, exactly.
I want to thank you guys, but I want to thank my team, of course, at HireNetworks. I want to thank Propel Marketing Group, who made this possible. I want to thank Joe and the Blind Barber. If you have not been here on Medland Drive in Raleigh, you should come. It's one of my favorite places, as you can tell, so we're grateful for that. I said earlier that to myself, I'm going to choose a charity each time to kind of highlight. If you've known me well enough, you'll know that it's not a surprise that the first one I'll choose is Band Together. Check out Band Together. I think it's bandtogethernc.org. Just a wonderful organization. All these guys have been to the events and are well aware of it.
My wife's co-chair.
Yeah, that's right.
Yeah,
well, that's right. See, I'm glad I brought that up.
Yep. Yeah, it's a great one. Good friends with the executive director, Thorne Dobbins-Beck. It's a great organization.
Thorne's wonderful, and want to thank you guys again. I know it was tough to get all you guys in the same room at the same time because you guys are super busy and travel, and so I'm grateful for it.
If we all knew we would be here, it'd be impossible to get there.
Right, exactly. You just wouldn't have done this. We would have criticized the other one for blowing it up.
Right. It would have been brutal. So I'm glad we were able to pull it off.
Thanks for doing this, Craig.
Yeah, Craig. Yeah, enjoyed it.
Pleasure.
Yeah.